Hey everybody, it's Friday, and that means it's another edition of the $100 million producers brought to you by UMortgage. And that's not Andrew Cady sitting next to me. It's a younger Cincinnati-bound Breon Price that is joining us today. Andrew had some family commitments, and hey, family comes first. And Breon is somebody we've been tapped to fill in for me and Andrew whenever we're not available. And welcome, Breon.
Hey, thanks so much for having me.
So everybody's been watching this knows me and Andrew. So tell us a little bit about your background and all that good stuff.
Yeah, so this is my 11th year in the business. I started actually when I was a junior at the University of Cincinnati as a processor. And basically, I stumbled into the industry. I mean, I didn't even know like mortgage had two G's in it, when I started as an intern, and, really got into the processing side. And for the first 6 years of my career, I was on ops. Okay. And then in 2018, got super burnt out of corporate America. Realized that like the industry was turning, and I wanted the freedom and flexibility that came with being on the sales side. I mean, honestly, I was an underwriter. Like I give all the underwriters credit out there because they have to deal with us as loan officers, pounding them and hounding them, and trying to make changes and and everything. And I wanted to get on the sales side. I wanted to be the one that was like, out there whining and dining the realtors and doing all of that. And so in 2018, I made the jump from ops to sales. I had never met with a realtor before. Never asked anybody for business. And started out with a game plan of like, hey, we're going to go after a higher type of clientele and we'll see what works. And so for the first 4 years, I ran my own brokerage. We built it up from basically just me and one processor to 12 loan officers or 13 loan officers that we have now, and then 4 support staff for our branch. It started with it's so funny because I had to update my LinkedIn from when I sold the company to UMortgage. And in my jobs cart on LinkedIn for like careers and different positions, there was it's St. Thomas, Virgin Islands, remote underwriting position for some like Caribbean bank. And like this was my fallback plan. I was like, if I cannot make this company work, I'll just go back to underwriting loans. And like this job sounds great. Like it's in the at the time I was single. I had, like no real obligations. I'm like, I'm just going to go there, and now 5 years later, here we are. So super excited to be here.
That's very cool. Fun fact is, I'm old, so I've been in business since 95. And the very first loan I ever closed, by the way, I started my career in Cincinnati where Breon is. In 2008, I moved out to Arizona and restarted the second half of my career in Arizona. But the very first loan I ever closed in this industry is back in 95. And it was with a title company. And the title escrow officer is Leo Grody. And Leo is one of Breon's. Explain, there's a connection there besides just a title guy to you.
Yeah, I mean, I had no industry connections in 2018. I mean, I literally moved back to Cincinnati because it was familiar to me, and I wanted to get back into the Midwest. And I sat down with actually Leo's daughter, Leah, who is the sales arm of their company, and then she introduced me to a couple of realtors, and then we actually became business partners. I actually sold Leo and Leah 10% of my mortgage company back in 2019 or 2020. And then now Leah's fiance basically is my operations director for my branch. So it's funny that like, every single person that you come across in this business, like always leave on a good term with them because it's such a small industry that you never know when you're going to come across that person again. And, you never know when you're going to rely on them or you're going to have to work with them. I know, one of the things that we wanted to talk about was, builder relationships. I got into working with builders because of Leo. I saw what Leo Grody's business was. It was all about these big production builders that he had almost as residual accounts. Like, every single month, these guys are sending him deal over deal over deal. And, that I was like, man, I want to get my business to where like I'm not always having to go out there and sell. It's like, hey, I sold myself one time, and now it pays itself over and over again every month.
That's amazing. And it's funny. By the way, anybody that's watched this show before knows that me and Andrew never script anything. We don't even discuss the show before going live. Like, I talked to Andrew all week, but we never discussed the show other than, hey, see you Friday. And the same thing happened today. Like, me and Breon has not discussed anything ahead of time, but he led into what one of the key points. The reason why I brought up Leo Grody was exactly where Breon went with that. I didn't coach him on this, but he said, you never know who you're going to run into later in your career, and not the, basically not the burning bridges, leave on good notes. And, I always respected Leo. But when I moved to Arizona in 2008, I honestly didn't know I'd ever be talking to Leo Grody again, and all of a sudden I'm seeing Leo popping up on my Facebook feed saying, hey, Todd, and I'm like, wow, and it's because of the connection of Breon now. But it just goes to show, as big as this country and industry is, you just never know who you might run into or work with in the future. And I can't stress this enough, differences aside, always never burn a connection, because that connection someday may mean the world to you. And again, there was nothing, again, Leo and me really, probably, other than what Breon's doing. I don't do loans in Cincinnati, so it doesn't matter. But it's just the idea that there's a guy, a blast from the past from, 17, 18 years ago, that is now circled back in my sphere again. So, and that's really important message. But let's talk more about your builders. I mean, you were known, most of us on the loan side, the loan officer side, we kind of whine a little bit about how builders take our business elsewhere, and it's a tough market to crack, but you've done well with it. So, and not only well with it, but it's not like it's some little mom and pop builder that doesn't have connections. You're doing it with DR Horton, right? Is that your primary one?
Yeah. So, we have about 4 builders that we work with on a regular basis. DR Horton is the largest, but I really target like that. My go-to builder is actually somebody that's going to build like 30 to 50 homes a year. So, not the mom and pop, but also not the big production that probably owns their own mortgage company as well. Because those are the builders that we actually can add the most value to. When like you said, when loan officers complain about builders sending their business elsewhere, it's because they don't trust you. That's just what they're pushing it elsewhere because they don't trust that you're going to get it done. And so you gotta reassert yourself earlier in the transaction. And hey, we've already underwrote this file, and we've already done this, and this, and this is why we're going to make this transaction the best that you've had in a long time. And that doesn't go for just builders, guys. That's for all accounts. If you're ever getting shopped that hard, or the listing agent says, hey, maybe you should call my lender, it's because, you haven't done all the things that are required to earn their trust, ahead of time. I work with builders because, I don't want to work with everybody. I don't want to work with 50 different realtors. I closed 437 transactions in 2022 with 15 realtors and 3 builders, and that took all of the emotional energy, that I had. That was it took a lot, to do that. I can't imagine having another account, added on to that. Right now I'm trying to figure out, okay, I have my 18 accounts that I want to ride or die with right now. Who's going to be the next 2, and how do I get more efficient in what I'm doing so that way I can add 2 more on. The best part about builder business, and why I think that loan officers, especially brokers, need to go after this revenue stream of business is, number one, like, builders are independent. Typically the builders that I go after own their own business. Okay. And it's very relatable to our business. Okay. They're on their own, they're building, they're competing against the big production guys, and they have a chip on their shoulder. And, I think that it's very easy for us to relate and connect. They also understand the micro isms of the economy. And, when lumber prices go up and they're having to either eat that cost or pass it along to the consumer, which sounds very similar to what we have to do with rates. So I have a great, connection with them and just sitting down and talking about business. Right. And, and then once they realize like, wow, this guy's actually in the trenches with me. Okay. Now it's super easy to partner with. The other thing that's great about builder business is, in our market here, it takes about 9 to 12 months to build a house, right? So like right now, I have $57 million on the books for this year already. Wow. Okay. Like that I've already apped, I've already pre-approved. We've already talked about interest rates. We already have a game plan for if rates go up, they go, their rates go down, what's going to happen. I sleep really, really well at night knowing that I have all of that business set and ready to go. That essentially now all I have to do is basically just stay in front of them, check in with them. And then people don't build cheap homes. Like the price points on new construction has gone up and up and up. It's like, as Anthony and I were talking about this the other day, it's like I can do the same 437 loans and make 25% more money year over year just because the builders are building homes at a 25% increase in price year over year. And so, my numbers look better, my stats look better, and I didn't have to sell again. I'm just, all I'm doing is managing the account that I already have.
It's funny you say that because being in Arizona where I do a lot of max conforming limit loans over the years, every year when that new conforming limit would come out, I always viewed it as a raise. And it was a raise because I don't know how I did a lot of max conforming loans. And, I can remember for years we were stuck at 417 from the housing crisis for years. That first year it moved up. It was like, hey, that's a raise. And then it moved up significantly thereafter. And my income moved up with it because I was doing probably 2 or 3 max conforming loans a month. And hey, it's a built-in raise, just like you said with builders. It's the cost, and the cost of housing is going up, and that just automatically increases your profit margins.
Well, and a lot of people reach out to me on Facebook and Instagram and text me about, hey, who are you sending all these construction loans to? Like guys, like like when UWM came out with their one-time close, like, oh, this is going to substantially increase your business. I'm like, actually, it's not. I don't do construction loans. That's not my game. I did one in 2018, and it was such a catastrophic disaster. Like like I'm like, I will never do this. I want to stick with end loans that that are just like everything else. Okay. And the other thing too, we talk about, a lot of my builders are now building at a very high price point. So I would say like $1 million and above. We rarely do jumbo loans on them. I love doing the 80-10-10s. Kind of throwback to the old school way of doing it. We created a great partnership with a personal banker that does a lot of the home equity lines for us. So these purchase money seconds, and exactly what you said, I can't compete with US Bank's jumbo program. Okay. Not if I want to stay in business forever, right? I mean, I can, maybe the one-off deal I can get down super low and make it work. But that's a hard way to make a living. To me, that's like doing 580 FHA credit score deals. Like, if you're constantly having to shop and compete with that type of clientele, you're gonna get burned out really easy. So we do a lot of 726 max conforming, and then I'll do a home equity line for the difference, and then I'll have my client put 10% down. So that's been our sweet spot. We did that. We got a $1.6 million one. We're closing up, I think, on March 3rd. That's, and I'm going to do the loan for 726. And everyone's like, why didn't you go do the loan for more? And I'm like, because this is what makes sense for me and the client. All right. And it's a better deal, in my opinion, So, yeah, I mean, it's, builder business, it's so untapped. And, I just think a lot of loan officers are afraid to go after it. I'm probably now I'm probably opening the door for all the Cincinnati loan officers, but I'll tell you the other thing that's really cool about builder business. Like when rates go up, they're the most understanding people because they deal with it on a regular basis with lumber prices and with the cost of material. And, they're trying to like, okay, do we lock in this lumber, pricing right now? Or, do we hedge it? And so, versus you try to call a realtor and be like, hey, rates moved up, so your client, it's like, it's Russian roulette if your head's going to get blown off, right? I mean, builders, they're much more understanding, they get it, and they're more willing to work with us on that, which is nice.
And that goes, like you said, the key is that builders don't like mortgage people out because they get stuck with that. It's hard to mortgage people outside their sphere because they don't know you. So if you, like you said, you've built relationships with them, they know that they can count on you to do it. I'm sure D.R. Horton still tries to funnel things to DHI or whatever the name of the mortgage company is, but you probably, I mean, I've won a lot of D.R. Horton business myself out here in Arizona. And it really just came down to a few builders. D.R. Horton's one of them, but there's a few other ones out here that it came down to me working with those sales agents in those centers and making them understand that I had their back. I knew what I was doing. I wasn't some fly-by-night loan officer. I wasn't just handing a pre-qual out to hand one out. And it really kind of takes the stress level down a lot with them, to where if the customer says, hey, I want to use Todd, it's a much better deal than XYZ that you have in-house, those sales agents are like, okay, yeah, that's fine. We know this guy. We know he's not going to stick us with a house that we designed for Mr. and Mrs. Smith and nobody else wants that house. And that's the biggest fear with them. I mean, a resale house is going to resell regardless. I mean, we built a house about a year and a half or so ago, and I'd like to think that our house is something that everybody would want. And we didn't get crazy with it, but I'm sure there's things in this house, especially in the price point we're in, that a few other people might walk through and say, well, I'm not going to, as a resale, it's fine. But as a builder, they might walk through, and if I fell out of escrow, and say, why are we buying this brand new house that isn't ours? And that's the key. If you're buying brand new, you want it to be your design, your little intricacies. If you're buying a resale, it's never going to be 100% what you want, but people accept it that way.
Well, and that's it's the same with us. I mean, my very first builder account was Pendragon Homes, and I landed her because they had a deal that had fallen out. They built a home for somebody, they weren't qualified, and now she's got this home on her books. I mean, part of the thing, like when you're a builder and you don't require a construction loan, that means that you're either fronting the money out of your own checking or business account, or you have a line of credit that you're building on, right? And so, every month and every day that goes by that you don't close, is more interest that needs to be collected. So after 60 days of basically her renting this house back to the clients, their realtor said, hey, you should call Breon. He's new to the market. Maybe he can help you out. Okay. And, just by knowing a guideline, I'll always remember this. It was a Freddie Mac. The business had been open for 5 years and 8 months. And I was like, let's run it Freddie and see if it gives us a 1-year tax return. And lo and behold, here we go. Right. And so, and I think this is where a lot of loan officers can get in the door. Okay. I love the triangle of trust relationship. Okay. Sales model, and leveraging the existing relationships that you have. Okay. I don't ever cold call. I'm not that guy. I'm not going to do, I'm not going to call 100 realtors in my market. Like, I'm going to leverage the 15 that I got. Okay. And I'm going to do it. So what I did with these clients is this. I said, look, I'm going to get this deal done for you, and I'm going to get it done in 10 days. But in return, I need you to call the builder after we close and say, hey, Breon and his team did an amazing job. If we did an amazing job. Okay. And then, he would love to meet with you. Okay, so all I did was leverage that out. Now she's one of my biggest accounts. She actually built my home. She's a huge advocate for me. And it all started because I fixed the problem that she had, and then I leveraged the relationship with that client to get that meeting. Okay, same thing happened with D.R. Horton and a lot of the other builders I work with. So sometimes it's not about asking, hey, who else do you have that I can work with? It's, hey, would you give a testimonial to that referring source and help me gain, and warm it up for me. Okay. I did a call with Nicole about, about our 100-person list. I mean, that's what that 100-person list is all about, is leveraging the relationships that you've already built to grow your sphere. I didn't know anybody. I literally, when I moved back to Cincinnati in April of 2018, first off, I tore my Achilles 3 days after I moved back here. It was like, so I couldn't even walk. Okay. So, and I 100% played the sympathy card to everybody that was. All right. Like, why, you see me hobbling around, like, can you throw me a deal, but, like, I had a couple friends that had lived here, and I leveraged one of those friends to meet with a realtor, to meet with another realtor, and then, now here we are, right? I mean, you don't have to be born into this, and you don't have to know a ton of people, just leverage the ones that you got.
It's something you said there that reminded me of something else. When you said you used the torn Achilles, you use that to your advantage to gain sympathy. One of my closest friends in the industry, who's also here in Arizona with me, is he doesn't work for UMortgage. He works for a competitor of ours, but his name is Tom Mancuso, and Tom is a amputee. He has one leg, and Tom has the greatest outlook in life over that. Like, he almost died. It was a bad accident he was in, and he probably should have died, but he didn't. And you'll never hear Tom complain about that his missing leg and the challenges that presents. Like, and it does, there are challenges. But he uses it, and he calls himself he tags himself IHOP Loans, like IHOP. Without his leg on, he has to hop, and he uses it. And you talk about an icebreaker, and I don't recommend anybody go out and cut their leg off today to do this, but I mean, it's about finding that little thing you can use. Like Breon was saying, he used his bad leg for probably 6 to 8 weeks, whatever it took to heal, but he used it to make people like notice him a little bit more. So, it's all about just using the tools that you're given, using anything that makes you stand out. I use that crazy tagline of mine, answer your damn phone, but it's silly. It's so basic, but it works. It makes me stand out amongst realtors because they're like, that's the guy I know who answers the phone. And it's just about finding something to make you differentiate yourself from the 1,000 other loan officers that are going to walk in that builder or that realtor's office today.
I mean, it's all, to me, like what you're describing is like, what is your personal brand? At the end of the day, I'm a loan officer for UMortgage, but like the power that I have, and is like, it doesn't really matter who I work for. Okay. And because it's the brand that I've built. And I think as loan officers, we have to realize like the perception of your brand is everything to the real estate community. Okay. Like my brand in Cincinnati, it can be boiled down, I think, to three things. I have very, very, very aggressive rates. Okay. I don't really work with first-time home buyers. I'm very much targeting that second, third, fourth-time home builder, or that custom built, that custom home. Okay. And I have a ton of fun. I don't ever just throw a happy hour. I throw a happy hour, at a new hotel, or we do, Top Golf with a ton of activities. And, like we're throwing a, everybody throws a golf outing, right? So, that's it. And how many realtors actually like to play golf? Okay. Very few that actually go. Okay. And I suck at golf. Like I'm horrible. Okay. So, but I want to do something, and I wanted to do it around golf, and so we're going to throw in mini golf. So we're going to call it the UMortgage Mini Golf Open. And I'm going to partner 3 realtors with either a loan officer or a title rep or an insurance agent. So that's their foursome. Okay. And we're going to throw some great prizes, and, it's going to be fun and enjoyable, and it's different. Okay. It's not, it's not the same, all men's golf outing that that everyone wants to go to, or everyone goes to, but nobody really wants to be there. And everybody kind of gets bored after 3 holes anyways. This is mini golf. Like, it's competitive, and it's levels the playing field. And so
that's just a great idea, because you know what the problem with golf outings are? And I don't play golf hardly at all anymore. I used to play a lot. And funny thing is, I played a lot of golf in Cincinnati, and I moved to the golf capital of the world, Arizona. I'd go figure, But what I always remember about those golf outings is right before it started, everybody would be like gathered around trying to figure out who's going off on what tee to start. And then you're with there's 2 foursomes there's a foursome, or maybe sometimes 2, that are running together at these big golf outings. but you don't really get to connect with anybody other than a small group of people. And then
Right.
by the time you get back to the clubhouse, half the people are drunk, and then half of them hurry up and get out of there because they're running late for something else. Mini golf's great because it's tighter knitted and it's fun. It's like, because I remember the golf outings. There's always a couple of those guys that are like way too serious. Like, dude, I'm not
Oh
freaking
yeah.
Tiger Woods. I'm here to have fun. I'm not worried about,
Yeah.
if
And
I'm
then you have the
over
other,
one.
well, and then you have the other one where they cheated, right?
Yeah,
So
yeah,
it's so exactly, and it's like be different,
yeah.
God, it's not a hard concept. Like do something that's going to stand out.
It
I
really
mean,
isn't.
it's and then deliver. I mean, like here's the thing, and this is what I told my staff this last week because I said, look, like right now, all the eyes are on us because we put out some really fun events, we've done some really fun things, and we got a lot of business flowing in, you know. But the problem with having no brand, the benefit of having no brand in Cincinnati, UMortgage had literally no name recognition here. Okay. And we got to create it, which is ultra fun to do. Okay. The problem is if we F it up, then like we have no emotional thing to back it. Okay. So right now, more than ever, at least for this year, like we have to realize that all of the eyes are on us. Okay. And everybody is looking to see what happens. Our competition is waiting for us to make a mistake. And the realtors that we work with are banking on us delivering. Okay. So you gotta like that pressure. I love it. I mean, that's what that's what fuels me every day. It is knowing that, hey, my back's against the wall and we have to deliver. But that's not for everybody, and that's not, and to me, if you're a loan officer and you don't have that mindset of, hey, we have to deliver every single time, okay, then go work for Chase. Go work for Well, because you're not going to mess up my industry. That's the way I look at it here is this is our region. Now Cincinnati, we had no brokers here. I mean, outside of Chad Katani, who's been carrying the broker flag in Cincinnati for a really long time, I was really like the only other one, outside of a handful of other people. And so, and now, it used to go from like this is you want to talk about the complete like 360 here or 180. It used to go from Breon having to describe what a broker was and why it wasn't a bad thing to now I have builders and realtors calling me saying, hey, my client wants to work with a broker. Okay.
Yeah.
And, I want them to work with you if that's the case. I'm like, man, this is like, I'm already on third base. I don't have to, like, I can, the first 3 pages of my book, I'm like, hey, this is why our broker's better. We don't even have to talk about it anymore.
Yeah.
So, it's
amazing the focus that AIM has given the broker channel, and it all started back with the brawl. I mean, me and Anthony Costa met each other back in mid-17 at the beginning of the brawl stage, which we don't need to go into all that, but the visibility the brokers got through that, and the AIM, and then the brokers are better, and now we've taken that formula out of AIM and put it into UMortgage, and we're ready to conquer the world. I mean, it's like we've got such a great group of guys here. We're also running close on time here, which is amazing how fast 30 minutes can go by. It just blows me away when you're talking to a friend and a colleague. And but I'm excited because I've known Breon for a while through UWM and he was from my hometown, and now we're teammates, just like Andrew Cady was at Fairway, and I always respect him, but now we're teammates. So it's really cool what we got going on over here. But again, this show isn't just for you mortgage people. I mean, we're just here to bring value to anybody who's watching. But anyway, we got about a minute. So any closing thoughts?
No, I mean, and I think this goes for UMortgage and really the entire broker channel. Like you said, it's all of the eyes are on us. I mean, it has completely shifted to where everyone is realizing that, wow, this is the platform, this is the future of what it's going to be. And I think it's everyone needs to realize that there is a responsibility that comes with that. And let's not F this up. We have a chance to like, I think right now, if we deliver over the next 18 months while rates stay high, the next 8 years will be so much easier. We won't have to explain ourselves, and we won't have to explain why we're better. everyone's going to know because it is better. But let's not give anybody a reason to say, oh, well, yeah, they're better, but here's why you shouldn't use them.
Exactly. I couldn't agree more. I mean, it is. It's like you might be a small company out there, but you represent the whole channel. We all represent the whole channel, whether you're with a big company or small company. Again, I really appreciate you stepping in for Andrew today, and I'm sure we'll see you again on here because of my travel commitments that are coming up. And anyway, everybody have a great Friday, and remember, hey, it's Friday, so go out there and let your realtors know you work when they work, and you're ready to work for them over the weekend. And
answer the damn phone. Let's go.
There we go. Anyway, we'll see you guys next week.